All right, Ilir, we are live. Good morning.
Good morning. Good
I guess
afternoon. I'm on the
it's
East
good
Coast.
afternoon to you at Slice HQ in New York. Are you the only one there? Is anybody else there?
I'm the only one here. And I didn't tell you this just before, but I've got a whole
Oh
pie,
no.
whole pizza.
Oh no. I miss that so much. So one of my favorite, for those who are listening in, one of my favorite things is when I go to meet with Ilir at his office in New York, he always orders a giant pizza. And so I
Look at the
purposely starve
size.
myself for 18 hours in advance.
Look at the size of
Oh,
this
dude.
slice.
Where's it from?
This is Rocco's Pizza, right down the block in Manhattan.
Ah, so
Yeah.
good, so good. Well, hey, so for folks that don't know the Slice story, can you just give a little bit of your background and how you came to start the company?
Yeah, I've been at it now for almost 10 years. I come from three generations of small business owners in the pizza space. I have a tech background. Decided to help family members with online ordering and websites and realized that the need was pretty consistent on a national level. Was blown away by the sheer size of this industry. It's a $47 billion industry in the US. And, I was looking at all the franchise models, Domino's and Papa John's and Pizza Hut, crushing it with digital transformation and giving consumers a really easy way of ordering. And I thought that small businesses could benefit from the same playbook. And launched in 2010 to convert the fragmented independent market into one big community, one big chain composed of small business. And so fast forward today, we work with 14,000 small businesses nationwide across 3,500 cities and towns. We're in essence the largest pizza brand in the country. And it's now just about kind of getting it out there and making it more well known.
And one of the things I love about your story is you did not raise capital for what, 7 years? I mean, you
Yeah,
bootstrapped
almost
the
7
company.
years.
Talk a little about that.
Yeah, between 2010 and 2016, we were completely bootstrapped. In fact, I was running the business from some pizzerias, sometimes at Starbucks. Built out a small team in Macedonia, which is where I'm from, and we had 2 engineers in 2015. But picked my head up that year and realized that we were about to do 40 million in GMV. And that's when I reached out to one of the founders of Seamless, who had already exited the company, Jason Finger and Wiley and those guys.
Yep.
And they didn't believe me. So I remember the conversation. It was like, hey, Wiley, would love to chat. And he's like, look, call me when you've got like 500 stores. And I said, well, I have 3,000. And he said, come to my office tomorrow. So that was the beginning of this next phase of the company, which was venture backed.
Yeah. And I imagine going from having been a bootstrapped entrepreneur with an operation in Macedonia, you weren't like trained, you didn't go to Stanford Business School, you didn't work at Google. So the whole idea of raising capital was not like you didn't just pop out of YC and raise $10 million in a seed round from a bunch of tier one venture firms. What was that like in the early days? And what did you have to learn about fundraising from these angel investors and seed funds?
Yeah, it's a really good point because when I raised capital wasn't what I needed. In fact, we had about 3 or 4 million in the bank, and we were profitable.
You were making money. That's right. You were making, you were making good money.
We were profitable. But for me, it was about attracting the best in the world to help me scale the business. I felt like we had a big opportunity to really accelerate growth, and capital was just something that allowed people to have skin in the game. And so we raised, I remember our first round was $1.1 million. I think it was at like a $14 million valuation. Not terrible. And, but for me, it was really
already
about
running a $40 million business, to be fair.
Correct.
I mean, yeah.
I would say the same round today is probably going for over $100 million.
Yeah.
But again, for me, the focus was really on relationships, talent, and surrounding myself with people who had seen sort of the scale that I was aspiring to get to. And it served me well. It was a very similar approach when we came together. And I always love telling that story as well. But for me, it's always been about relationships and talent and team.
And I think that point though, like I would say, there's this narrative out in the market of like, don't always take the highest valuation on fundraising. I mean, you've done a good job of going out and getting good people around you that could help you build the company. Like you said, you raised $1 million at 14 or whatever it is. I think today you might be the founder I work with that owns the biggest chunk of the company. I think you own north of 30% of a company that's going to be worth, I think if we play our cards right, 5, 10, 15 billion. I know you have your heart set higher than that, and I believe you will. But I think it's such a great lesson learned. Like it just doesn't, getting the right people around the table, you'd gladly trade that off any day for having raised money on different terms, probably.
Yeah, absolutely. And look, bootstrapping the company helped
Yeah,
tremendously with
obviously.
that. And I could have raised money sooner, but I don't think we had earned the right to raise money.
Yeah, yeah,
We really needed to prove a bunch of things out. And what it also has allowed me to do, as you know, is be incredibly generous with equity in terms of hiring senior talent in the company. So our options pool has always been very healthy, and I'm really proud of that. There's
yeah,
now already a number of folks who have been part of the company that have earned more than $1 million.
yeah. And so fast forward to when we came into the company, we raised, it was called a Series B, but it was kind of a Series A. I mean, it was before that, I think you'd only raised $2 or $3 million.
3 million, yeah. Yep.
Yeah, but the company was, if I recall, was at about an $80 million GMV run rate. Revenue is a percentage of that. And, how did that, we raised, I think it was, what was that round? That was 15 million. How did that change your outlook on growing the business, and sort of maybe talk folks through what you've done from there? Because to me, you sort of had the bootstrap mode, you had the seed mode, you had a couple years there, then we raised the 15. The business grew, obviously benefited last year. Maybe you can walk us through that. We raised the big round with KKR last year. And now it's like game on. I mean, it's you and Domino's to own this category. Not overly simplified.
Yeah.
And obviously I'm bullish.
For me, look, raising the round when we met, for us, that was the first real round of funding.
By the way, we met at the National Pizza Convention in Las Vegas for those who are interested.
Well, look, I will say for those watching, I've never met a more present investor and just like go-getter as you and Hans and Glenn. I mean, we spoke on the phone, and within like 10 hours, you were in Vegas.
I think it was less than 12 hours later, we were in Vegas. Yeah,
exactly. And it was you and Robin. And for me, that meant a lot. But, raising that round, for myself, it required sort of a different mentality. I went from being very efficient, not in a bad way, but went from being really cost conscious and slow moving and very careful about decision making because access to capital wasn't there, to now kind of going for it. And I'll be honest, like it took a couple of months of me getting adjusted to that and being okay with burn.
We talked a lot about that back then. Yeah.
And so put a ton of investment behind scaling our sales team, put a ton of investment around scaling our product and engineering team. I mean, when we met, we had just launched the consumer-facing product. We didn't even have an app.
I know. The mobile app had not been launched, and we invested.
Exactly. Yeah. Exactly. And it was just so it became a stepping stone and just really an amazing resource for us to accelerate growth. And I'm proud of the way the team executed, following that investment.
And how did you continue? I want to talk one more step about fundraising, then I want to talk about team building. So, you're cruising along, but it's a complex business model and not that obvious to a lot of investors, which is the case of a lot of companies we invest in. I mean, I tweeted out this morning, my biggest lesson learned in venture capital is just bet on good people in big markets and don't overthink it. Cause I'm working with 2 companies that are fundraising right now, and these investors get on the phone with me and they're like, what about this? And what about that? And I just lean back and I said, look, those are all great points. Those are issues we have to address. But at the end of the day, look at the size of the market we're going after, the business model we're building, and assume we'll get those things solved. And some of our greatest misses have been when we overthought it. How did you deal with that in kind of the call it 18, 19 window, when it wasn't obvious yet that the business was working? Obviously last year, COVID hits, pizzas comfort food in good times and bad times. Your business took off like a rocket, grew north of 100%, became profitable. I'm just gonna throw a few stats out there for folks. But prior to that, I don't know, you probably pitched 30 VC firms, got a lot of no's. How did you deal with that? And how did you internalize that? And kind of, because it's something a lot of entrepreneurs, it's hard, right? You take it very personally when somebody says, no, I don't want to invest in your business. How did you deal with that?
Yeah, there was a number of lessons. I would say number one, I was pitching everybody, and the reality was you
Yeah.
can't do that, right? Like,
Yeah.
the whole saying, it's not you, it's me. Like, know who you're talking to and at what stage and how much money you're raising. Like, I remember we were raising the 15 when we met, and for some reason I'm talking to folks who write minimum $25 million checks, and I'm just like, why am I doing that?
That's a great lesson learned.
To really know who you're talking to. Two, zoom out. Like, as founders and operators, we're just in the day-to-day. A big lesson for me was just, I was always pointing the finger at the investors, and I'm like, why don't they get it? But I had to look in the mirror and say, how do I simplify my story? And, if you remember when we started speaking, it was just like, look, I've got 10,000 shops and they're doing 100 orders per month. I'm going to go to 20,000 shops and they'll do 300 orders per month. And that's 10 billion GMV. Like, that's our mandate. I didn't always tell the story that way. It was always sort of very detailed, and the more detailed you get as a founder, you're going to get detailed questions. Right. And so for me, I just felt like I needed to get better about telling my own story and what we're trying to accomplish in a macro way, instead of kind of getting caught up in the details. And then, there's a lot of investors who I think are somewhat gun shy, and that's okay. Just know and understand, some of the questions that they're asking. Try and really figure out the root sort of what they're trying to, get to, and keep notes. Well, Wiley, who I remember he had like pages and pages of notes of investors and conversations, and remembering that, and then building on those relationships over time, and going back to those investors and saying, remember, this was one of your concerns. Like, we've been able to solve for that. And I figured that was really probably the most important aspect for long-term fundraising, not just sort of short-term.
And I think also too, like, investors come in with preconceived notions. They want to compare you to something. I remember, how many conversations have you and I had where people met you and were like, yeah, we don't like food delivery. And I'm like, we don't deliver the fucking food. We don't do food delivery. It's a tech company.
You're Grubhub for pizza, and Grubhub has all these restaurants. You only have pizzerias. How are you going to? I'm just like, that's not our model. And again, it's look, you've got a very small window in time to be able to explain exactly what you do. Analogies really help. And what really helped me was eventually saying, look, you look at Domino's, 75% of their volume is digital. You look at local, sub 10%.
Yeah.
There's no reason why they can't be on the same page, on the same level. And so we're going to digitize local. And that's a much easier sort of story to understand. But yeah.
And are there are there people that you reached out to help you think through that? I think one of the most challenging things as an entrepreneur and a founder and a CEO is you kind of feel like you're on an island, right? You're out trying to raise money. The rest of your team isn't necessarily as involved in it as you are. You're getting these no's and you're constantly like, shit, what do I have to do differently to make this work? It's stressful. It's frustrating. We've all been through it as founders. How did you deal with that? Are there personal relationships you reached out to, coaches, mentors? How did you handle that?
Yeah, all of the above. Look, reaching out to other founders and CEOs who have been successful in fundraising, trying to understand from them. I remember I spent a lot of time with Alon Block, who's the founder of K Health, also was founder of Vroom, co-CEO at Wix. He knows
a little company called Wix.
Exactly. And he was generous with his time, and we sat down, and he literally would walk me through sort of how he would tell the story. So I think reaching out to a network of folks that can help, do that. And I was surprised by how many CEOs and founders were open to helping. And I realized over time that it's kind of this unwritten rule. The willingness to help is there. You just have to reach out.
Mm-hmm.
I would say that's probably the biggest, it was the biggest help. And then, the folks around the table, people like you and Ben Sun and Paul Applebaum, and, just really leveraging your board as partners, not necessarily as, just investors.
Yeah.
So those were some of the big unlocks for me.
So last year, I think you guys announced you crossed $1 billion in lifetime GMV. Knock on wood, that'll be an annual number soon. How have you had to change your approach as you've kind of gone from founder to CEO over the last 12 to 18 months as the business has really scaled? And maybe give sense, whatever metrics you can share, you can probably share the employee numbers, which I think is helpful. How have you had to adjust your approach as a CEO as you've scaled the business?
Yeah, it's probably been the number one challenge for me. And I think it's probably the number one challenge for all founders. Remember, I started as sole founder, operating the business by myself. And so I've had the luxury of operating and working in every single function that we have today, customer service, sales, you name it. Graduating from that and knowing and understanding that you can now trust some leaders to come in and own their own function and help scale the business was a really important lesson for me. But the sooner that we could do that, the faster we scaled. And I would find myself getting too involved. And what I realized was the more involved I got and the more sort of I disempowered our leaders and operators, like the worse off we were. So being really conscious of where you're spending your time as a founder, and for myself, where am I spending my time? What are the one or two things that I need to accomplish every quarter? And just focusing there and trusting the team. Definitely an adjustment that I've had to make over time and continue to make today. We have a team of over 700 people today, globally, across 5 offices, well, now 700 different homes. And yeah, it's still, it's still a challenge because we were talking about it with Jack, our chief people officer, yesterday. And there's so many people who have joined the company in the last 60, 90, 120 days. As a CEO, it's your responsibility to make sure that they're set up for success.
Yeah.
Not necessarily diving into phone calls and sales calls. And that means you're leaving your post. You're not being the CEO, you're being something else. And so all of these lessons have been so powerful for me.
And you guys have a global team. You have people in Ireland, you have people in Macedonia, you have people in New York. So last year, how crazy was February, March, April, May for you guys as you had to shift everybody to work remote, rolling out HR policies around the world. How did you guys deal with that? And maybe talk a little bit about Jack and her role. Cause I'm, as you know, I'm a huge fan of the people executive role. And I think companies should hire them as early as possible. And I know she's been instrumental to the growth of your business. Can you talk a little about that?
Yeah, I have goosebumps just thinking about it, to be honest, because I'm gonna paint this picture for you. COVID's hitting. For the first couple of weeks, our business performance drastically declined. As you know, in parallel, I'm having conversations with KKR around getting that done. We now have this global team, most of them in Macedonia and Ireland. Our team and our frontline teams are all on desktop in an office.
Yep.
Now they need laptops. Within 2 weeks, our business started to really accelerate. So now in parallel, we have to figure out how to get people to work from home, how to support at that time 9,000, 10,000 small businesses, especially as they were going through the most difficult time in their life and journey.
Yep.
Raising capital. And it was interesting. It was a 3-month window where we just went to sort of war mode, like wartime mode with our exec team. I had just hired 3 new execs.
Yeah, I was going to say Jack had just started in December or January?
February. Yeah.
February.
Thank God. I mean, you were sort of, advising me. You were like, get this done ASAP,
Yeah.
and we did. So thankfully, we were fortunate in that timing, but it forced us to become a team much faster. And so
Yeah.
that was the silver lining. But we met twice a day, every day, first thing in the morning, last thing at night, for months.
Wow.
And everyone came together, and we were able to get all of our team members to work from home. Thankfully, no one was impacted by COVID. And then we were also able to obviously be there for our customers, our restaurant partners, and the result is triple digits growth, obviously.
Yeah,
Since
you guys crushed it last year. What an amazing time. I do think we're going to have more resilient, stronger, more resilient companies in this era because people went through that whole phase last year, right? They realized how precious their time was. They realized what executing in a short time frame was. They realized being empathetic to their teams is super critical. Most companies operated with less burn. So I've been saying this a lot. I think we're going to have better, faster, stronger companies coming out of this.
yeah,
Obviously, you guys also did an incredible job of, like you said, empowering 10,000 small business merchants to get back online and serve their customers in the middle of a pandemic, which was
yeah,
incredible.
I would say they realized that the travel budget doesn't need to be that high.
Yep.
Um, but I would say the most important one, and something I've invested in since day one, is opportunities have borders. There's opportunity has borders, but like talent doesn't. And so understanding that you can now tap into talent from anywhere on the planet, and you can see how business can continue to perform at a high level even with a distributed workforce, at least in some pockets. I think that's been a huge unlock. And um, I couldn't tell you how many founders come inbound and talk to me about, hey, how do I spin up a team in Macedonia or Argentina or
Well, almost everyone I have has. I mean, it's really a secret weapon for you guys. I think any company going after the SMB tech space has got to find a way to build a capability like you've got. I mean, you guys have just got an unbelievable ability to service that business segment with a low cost infrastructure. By the way, super talented people, incredibly bilingual, like just an amazing group, having been there since you and I went to Macedonia together 2 years ago. What
literally
about
month two, you're
I
Macedonia.
know it was my, I think it was June of 2018. Yeah. You were like, let's go. We're doing a board meeting in Macedonia. It's awesome.
Yeah.
What about, so as you think about this year and scaling the business, how did you you had a monstrous year last year. You guys are coming into this year. You're going to build the company. Hopefully it'll be a public company at some point. What did you talk about with your team? How did you set the tone? How did you, again, back to that point of like up-leveling your capabilities as a CEO? What have you been doing over the last few weeks to get people ready for this year?
Yeah, for us, it was all about just going back and we always reassess our vision, our mission, our strategy, every year as we go into the planning process. And we continue to be committed to this vertical and this industry. And again, a $47 billion industry in the US, about 30 billion of that is small business, and about 28 billion of that is offline. And so,
Unbelievable.
yeah, and for us, it's the opportunities there. And we're only scratching the surface in terms of managing what we say orders per location. So orders per shop or wallet share per location. So the focus this year is going to be about just going all in on that and closing the loop in terms of the end-to-end experience. So we're looking at managing all payments and transactions for the small business, and we're looking at managing all the consumers on behalf of the small business. And we're packaging that all up with an initiative we call Project by Slice.
Can you talk about Project by Slice?
Yeah, Project by Slice
Or is it top secret?
Yeah, it's
Not
actually
anymore.
If you go to slicelife.com, there's a link there that's called Slice Accelerate. That's sort of the branded version of it. But in essence, we've come in and done a really good job at managing the online presence of a business. And so what we really wanted to do was just graduate that to 100% of the small business's volume. And look, I have family members who own pizza shops. They have no business marketing. That's not why they opened up the pizzeria. They're buying products independently. They're making decisions on pricing that lack sort of data and information. And so we're coming in and saying, look, let us manage 100% of your demand, and let's make sure we bring some of that buying power to lower the cost of operating your business. Let us process your payroll. Let us process all of your transactions and lower the cost of payment processing. In essence, it should cost a lot less to operate an independent shop.
Yep.
And then obviously we can generate incremental consumer demand because we're now managing that customer relationship. And so when you package that all together, that's Project by Slice.
Yeah. I mean, it just seems like, if I look at what Square did, we were an investor in Square. If I look at what Shopify has done, obviously BigCommerce, where we're an investor, this whole movement, as you know, we have a big focus on SMB tech, but I think people have just dramatically underestimated how big this opportunity is. And when I look at where you guys are, like you said, you're just scratching the surface in terms of enabling consumers to order with these merchants, but like all the capabilities you guys are going to give these merchants over the next 5 to 10 years is going to be awesome. It's going to be pretty cool.
We're excited by it. And we look at that sort of the nodes around the merchant and the opportunities that we can, like problems we can solve. I'll give you one example. Our merchants in 2020, the existing ones, spent a combined $400 million in marketing in 2020. Inefficient, yellow pages, Valpak type of marketing. We think about, how can we manage that budget?
Yep.
And how special would it be, and what kind of an impact we can make to small business if we can deploy that capital in a way that has much higher ROI. So just one example.
What I love about it is, one of the things we love to look at is businesses that increase the TAM, right? And at some level, you guys are increasing the TAM for each merchant. If you can take a merchant that's making, 500,000 a year in top line and take them to 600, and, a huge percentage of that drops to the bottom because their fixed costs don't change that much, just incredible. And you are doing that, right? You guys have merchants that are running almost entirely on Slice. What advice would you have so I'm a aspiring entrepreneur and I'm thinking about jumping out and starting a new business. What advice would you give me?
One is just do it. Take action.
That's great advice.
Analysis. Even within companies, I see so much analysis sometimes, and it's just like, for me, it's much more simpler than that, which is you're doing something because you believe in it. And if you believe in it, like allow analysis and data to kind of guide you as you go along, but don't let data change your beliefs. So if you believe in something and you're passionate about it, start taking action. Don't chase what you think is, money, because I'm telling you, you're going to give up because money doesn't come that easily. And the moment that it doesn't show up, you're going to switch course. And every time you change course, you're starting from zero. You're not allowing that work to compound over time. I mean, look, for me, year one, we did, I don't know, maybe 500 orders total. And we made $1,000 because we charged $2 an order. It's easy to give up. But in year two, we did like 5,000 orders. Now, that's still not a lot of money, $10,000, but it was 5X or 10X year one. So, being passionate about helping independent operators and passionate about this category helped me overcome those years of just, grueling work. And it is a lot of hard work. So pick a passion, act on it, commit to it long-term, make tiny little adjustments along the way. And the last thing I'll say is surround yourself with people who are better, smarter, more experienced than you are along the way. Don't have an ego about that. I hope I'm the dumbest person at this company, because that means
you're not.
I've hired well, and that every person we've hired is smarter than the next.
Yeah. The just do it thing, I think, is so powerful because, I tell people this all the time. Like, you look at your business, right? We started out building websites for pizza companies. Now you look at where we are today and all the things that are unlocking in terms of Project by Slice and potentially providing fintech capabilities to the merchants and all the COVID tailwind. But by just doing it, you put yourself in a place where you can take advantage of those opportunities and catch the tailwinds when they arise. Did we know there'd be a global pandemic that would, force merchants to focus their business on delivery in 2020? No. Did it help? Absolutely. But you had to put yourself in front of that wave to catch it. And I think it's really important advice for entrepreneurs. Just do it. Get out there. It doesn't have to be perfect day one, but year 5 or 10, you might be putting yourself in front of a multi-billion-dollar opportunity.
I couldn't agree more. I mean, I could not agree more.
Well, you said it. So
I'm just thinking of all the things that I tried, that if I were to like go and kind of analyze, it would have taken forever. But pricing, we learned pricing by doing it. Like we went and started charging one price. We learned that pizzerias didn't like it, so we changed it. But we wouldn't be in a position to like land on our pricing model unless we actually tried it. So I can go down the list.
Yeah. And lastly, you've recruited some amazing folks to your board, independent board members in the last year. Can you talk a little about that and what drove you to do that and the value that you're getting there?
Yeah, it's been amazing. Well, one thing that drove me is feedback and guidance from board members like you, and others. And I'm
very passionate about.
I have to be honest about it. But the other one is just bringing operators on board who can kind of balance the conversation. It's, with all due respect to investors, if your board is just a bunch of investors, the conversations are going to be very financial.
Mm-hmm.
But if you're missing operators, then you're not really having some other real, more important conversations sometimes about the business itself. So that's one. 2, diversity is just critical. And as you know, from the Slice board, it's been night and day between sort of what our conversations were about a year ago. Fast forward to today, where we have Deirdre Bigley on the board. She's on the board of Wix, on the board of Shutterstock. She's the CMO at Bloomberg. And then an announcement we'll make tomorrow, or perhaps next week. We have to pause it because of the craziness going on in the country today. But that's also a very powerful, smart, experienced leader in the space. And that combination is just allowing us to have conversations that we would never have had if it wasn't for them being here.
Yeah, she's amazing. Both of them are amazing. And this is something I'm super passionate about, as you know. I just think the conversational dynamic in the board changes when you get people who bring that operating perspective, and then particularly when they're diverse, just because it just changes the conversation. And it's good. It's good for business. It's good for the company. I know it's been great for you.
Without a doubt. I strongly recommend that. And don't make excuses if you're a CEO. Don't make excuses. Make it a priority and it'll happen. But don't keep putting it off.
Yeah. All right, man. Thank you. I'm going to let you get back to your pizza. In fact, I might have to go order one myself. You got me intrigued. My kids will be excited since we're all working from home and schooling from home. But this has been great. And obviously, you and I have become great friends, and it's been super fun working with you over the last 3-4 years. And I think you and I have talked about this a lot, including this morning. I couldn't be more bullish on you and the company going forward. I think this is going to be an amazing year. And I just look forward to the next few years. Like, just so many opportunities that are starting to open up. Now's when it gets fun. So I'm psyched for you, man.
Exactly. Thank you so much for having me.
Thanks, Ilir.
Likewise.
Take care.